If you've searched LLC versus S corporation, you've probably found 100 articles explaining what each one is. That's not what you need. You need to know one thing. At what point does an S corporation actually start saving you money, and when does it just add cost and paperwork for nothing? That's what we are covering today, not definitions, numbers. First, a quick clarification, because this trips people up consistently. LLC and S corporation are not two competing business structures. An LLC is a legal entity. An S corporation is a tax election. You can form an LLC and then elect to have it taxed as an S corporation with the IRS. So the real question isn't LLC or S corporation. It's, should my LLC keep its default tax treatment or elect S-corp status? I'll let you finish this video, but there is something important I would like to share with you first. If you are paying more in taxes than you should, this is for you. I'm inviting you to join my Tax-Free Wealth Awakening Summit and learn practical strategies to legally reduce your taxes and keep more of what you earn. Reserve your spot now by using the link below. See you at the summit. The entire reason people make that election comes down to one tax: self-employment tax. As a default LLC, every dollar of your net profit is subject to self-employment tax, which is 15.3%, covering Social Security and Medicare. For 2026, that 15.3% applies to net earning up to $184,500 in Social Security wage base, with the Medicare portion continued beyond that with no cap. An S corporation works differently. You pay yourself a salary through payroll. That salary is subject to payroll tax, but any remaining profit paid out as distribution is not subject to self-employment tax or payroll tax. That gap is where the savings live. Here's the catch. S-corp status adds real costs: payroll processing, separate business tax return, a good bookkeeper who understands payroll. At low profit levels, those costs cancel out the savings or exceed them. This is the part people skip, and it's the part that gets business audited. The IRS requires that if you are an owner working in your S corporation, you pay yourself a reasonable salary before you take any distribution. Reasonable compensation is essentially this: what would you have to pay someone else to do your job? You cannot pay yourself $10,000 in salary and take $90,000 in distributions just to avoid payroll tax. If the IRS looks at that and decides your salary was unreasonably low, they can reclassify those distributions as wages. That means back payroll taxes, penalties, and interest, and that bill typically runs well above the original tax you were trying to save. So before you ever calculate your projected saving, you need a defensible number for a reasonable compensation based on what someone in your role, your industry, your region would actually be paid. That number is what determines how much of your profit can legally go through as distribution, and therefore how much you actually save. Once you elect S-corp status and set that reasonable salary, you are not just writing yourself a check anymore. You become an employer. That means running actual payroll, federal and state income tax withholding, Social Security and Medicare withholding, employer-side payroll tax matching, quarterly payroll tax filing, and annual W-2 preparation. If your state has an employment insurance tax, you are now paying that too. This isn't optional, and it's not occasional. It runs every pay period, whether your business had a good month or a slow month. Beyond payroll itself, an S corporation carries its own tax return, which is separate from your personal return, plus a K-1 for each shareholder. Most owners need a payroll service and realistically a bookkeeper or accountant who's comfortable with the S-corp structure. Is it worth it at all to be an S-corp? Here's what I want you to walk away with. An S-corporation is a tool, not an upgrade. It's not something every profitable business should default into. If your net profit is modest, if you are not able to pay yourself a reasonable salary consistently, the added payroll and administrative burden can outweigh what you save. I've seen business owners elect S corporation status too early, then spend more on maintaining it than they saved in tax the entire year. The decision isn't about hitting a certain revenue milestone. It's about running your specific numbers, your net profits, a defensible, reasonable salary for your role, and your actual administrative costs, and seeing whether the math holds up for the business this year. If you find this video is helpful for you, share it with a friend who has the question, should I start an LLC or an S-corp?